A call now from Tony, who's in Toronto. Good afternoon.
Hi, thanks for taking my call. Dave, my question is about Trinidad drilling. As you can see, all the the producers went down, even the drillers also. But is this a safe entry point at these levels? And with the U.S. dollar going up, would benefit these companies in earnings as an earning boost?
Right.
Thank you.
So, Tony, this is a term I haven't used for a while, but I'm not sure you want to try and catch a falling knife. I don't know how much damage there will be in the price of crude. Arguably, these stocks are getting pretty sold out, and arguably you could get a pretty significant bounce at any time. I just don't know when that's going to come. And one thing I've proven over time is I'm not very good at picking bottoms. That's just not what we do. We look for strength in the face of weakness. I would prefer to look at the sectors that are actually performing well in this weak tape. The problem is that it's a competitive industry. Trinidad has a very modern fleet, but stocks come from close to 13. It's 8. It's not showing any sign of slowing the descent. And I think the service industry today, I'm actually short in one of our portfolios, an ETF portfolio we run, short the service companies. The XES is down 3.5% or 4% today. I just don't think it's time to step in front of that freight train.
And if you were to look at a company like this or a sector like this, would you wait for some sort of a turnaround, a breakout, something significant, meaningful?
So we run a model that tracks the percentage of securities within an industry that are performing well at any given time. And they can cycle between maybe 10 or 15% holding up versus the rest selling off at a low point to a point where 70 or 80% of securities will be performing well near a top. And the percentage of stocks in long-term price advances is consistently deteriorating. So the market's becoming narrower and narrower across virtually all of the commodity groups until we start seeing that breadth reading start to expand, meaning money's actually getting put to work. I'm not going to touch these things. And even then, we would look for the one that's held up better than all the rest. So I think the big mistake often is trying to say, I'm smarter than the market. Market generally gets it right. You can leave a little on the table, miss the bottom, see that there is something changing for the better before you put the money to work.
And would you say that process from narrowing breadth to expanding breadth takes maybe a couple of weeks sometimes?
No, that can take a week, it could take 2 weeks, it could take a few days. I mean, back in 2008, we were sitting 80% cash going into March of 2009. And the breadth readings for the market started to expand in the third week of March. And we were pretty close to fully invested within 2 weeks. So we missed a little off the bottom. But the problem is private investors hate to lose money more than anything. So you don't need to be a hero. This is all about not having big losses, number one. And then second, when the wind is at your back, take advantage of it. Certain sectors right now have the wind at your back. So why fight that? Those are working. These are not. I'd prefer to wait and see something change for the better. For the near term, it looks like energy prices probably continue to be sloppy. U.S. dollar continue to be strong. That's not good for commodity-related sectors.
Let's look at the automakers now, specifically one that starts with F. Go ahead, Richard in St. Thomas.
Thanks, Mark. Ford. We've been playing the auto sector with Magna, Martinrea, and Ford. We've done well with the parts makers, but Ford's been disappointing, and we just wanted your comments on that.
Yeah.
Thanks, Dave.
I think really anybody who has significant Europe exposure right now is facing a big headwind. So Magna's been a big weight for us over the last 2 years. We've had to come out of a little bit of it. We still own it. It has pulled back, more than I'd like to see, but it's on concerns around Europe. And we'll have to see where things go from here. I think we're sort of sitting on the 1 yard line. So I would prefer to look at the parts makers than the manufacturers. And again, Ford is not the sharpest tool in the shed right now. So I think I'd be waiting for a better opportunity.
Thank you, Richard. Let's take a break, and we look at a 5-year of Ford Motor, and we'll see you shortly.